Welcome to the One for the Road podcast. My name is Mr. K. Alongside me, as always, is C Squared. Tonight's topic: the top five U.S. market sectors this year. We're going to have some fun. Count down the top five U.S. sectors. We've seen some sector rotation. We'll get into that. And C Squared said he's ready to go for some bold 2026
Yeah,
predictions
exactly.
for
Me being
the
the
market.
former bull that I am, we'll discuss that. We'll discuss maybe the sectors and the Japanese carry trade being a bull.
Right, right. All right. So I'm going to quiz Mr. C squared. I have the top five in front of me. Coming in at number five sector. What do you think it is, C squared?
Let's see here. How about either utilities or staples?
Close with the utilities, not staples. So
Okay. So it was utilities.
no, no, no. You were close with utilities. Staples was way off,
Yeah, 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 yeah,
but
yeah.
it wouldn't have been off last year.
Yeah,
I
so
have the 2024
utilities.
numbers too.
Let me see. I will not probably get four and three. I will say two is commodities, and particularly metals, rare earth, gold, silver, and stuff of that nature.
Oh, I didn't even
That might be number one.
I didn't even look at that as a sector, so sorry. That wasn't
So
amongst the 11 sectors I looked at.
I'm pretty sure that gold and silver have been ripping.
Yeah,
I'm
I didn't do Bitcoin or precious metals
Yeah, yeah.
in my study.
Bitcoin is on a was on a pullback mode.
Yeah, that's a good point.
AI technology has got to be up there, way up.
Tech is in the top five, not
Yes,
at
right.
number
Right.
five.
Yep.
So at number five is financials. Uh, Last year it came in at number two. So took a drop to number five this year. Year to date on financials is 11.79%. The top holding in the financial sector is Berkshire Hathaway. Number two is JP Morgan. Of course, Wells Fargo's in the top 10, Goldman Sachs, and other banks. So a pretty good year for the banks.
Wells
Oh,
Fargo, good God. It's the Apollo.
So last year, financials had a 30.5% return, and they were number two. This year, they fall to number five with 11.79% return. So number four is utilities.
Yeah.
Utilities have a year to date of 15.23%. Uh, Utilities are holding the number four spot. They were number four last year. They returned 23.28. So utilities the last 2 years has been very consistent with really high returns.
And super
20.
high rates, I might add.
Yes.
If
Oh my God.
if the,
Yes.
if the lights go off,
Right.
you know that utilities is going to three.
Right. Right. I didn't know utilities was did really good last year, but yeah, I thought this year the buzz was on two fronts. Utilities are going to be powering the AI, so they're going to be hot because of the AI buzz. In 2025, especially the last quarter, in my mind, a lot of the stocks went up because of the AI buzz. And the AI buzz is a lot more hype than reality, if you ask me, and
Yeah.
a lot of spending towards what might be.
Yeah.
So the number one holding in that field is Next Era Energy. I did not do too much information on that. I am not a shareholder of Next Era Energy, so I don't really have a feel for its performance. And to your point, C squared, yeah, utility rates have skyrocketed.
Well, I was going to
So,
say, I can't believe that the Duke of gouging people is not in there.
oh, they're in the top 10. Oh, they're in the
I
top
thought as
10
much.
of that fund. Yes, but not number one. Next Era is. But yeah, the Duke is, I think, fourth, the
Lovely.
fourth biggest holding in that sector. Let's put it that way. Number three is industrials. They were number six last year.
That,
They have a year to date return of 18.37%. Last year, 17.31. Last year, they came in at number six. This year, they're number three. Number one holdings GE Aerospace. And I got this fund mirrors what the fund I kind of made up in July, the Triple B7 with GE Aerospace, the former Raytheon, RTX is a big holding in that too. So a lot of the defense, Boeing's in here. So a lot of the big defense companies make up the industrial sector, and they've been doing good. I think, the big beautiful bill surely helped.
yeah,
Uh,
right, exactly. And as we've spoken of on previous podcasts, Doge and Elon unwittingly helped them out substantially.
yes, yes, yes. Unwittingly, yeah, to your point, all the billions that Doge saved, the Donald took and threw it at the industrial sector
Yep.
in these huge contracts for defense spending and military ramp up. I don't know what for, but whatever. Number two is communications. Last year's number one. Communications is at 21.15%. Last year was the number one holding. So if you've been in communications, you've been sitting pretty. You 30% return last year, a 21% return this year. Number one holding in communications is Meta. Number two is Google. I find it interesting that communications has about at least two of the three Mag 7 companies in it.
Yep.
And of course, those are top 10 holdings. So, with Meta being number one, Meta had a really good ramp up in the beginning of the year and missed their quarter, and they plummeted, and they're coming back to life.
Yeah, kind of hard to sell big goggles when that
Right.
didn't go over that well.
Right. And number one, not surprising, is tech. Year to date returns of 27%. Tech, believe it or not, last year was number five with
Really?
a 21% return.
They didn't do
Yeah,
it. They didn't have a PR firm to actually go out and sell AI.
yes, yes.
Did they
So,
hire a bunch? Did they hire a bunch more of AI developers? No, they hired a Wall Street market or a
right,
New York marketing firm. And
right, right. Number one holdings Nvidia. The a lot of the Mag Seven, of course, is in tech. Microsoft and Apple are other Mag Seven sector components of tech, of course. Not too unintuitive there. Nvidia. What do you think long term on Nvidia? There's a lot of buzz.
well, so they jumped recently on the Don announcing that he was going to let them sell chips to China. One analysis I actually saw is China has already declined to buy those chips. They're not the chips that they actually wanted. And they said, we told you
Yes.
we didn't want these chips. So that is like the plebes retail rally of announcing, of the Don announcing a bunch of stuff that is completely irrelevant to
Right.
anybody that knows anything about their business model. And
Right. Right.
so, but I do believe that they have some smoking chips. Now, there's also rumors that China has quantum chips. You know what? You can't believe anything you hear. I'll see it when I
Right.
believe it.
Right. Right.
So, it's like why do they want to buy the high end Nvidia chips so bad if they have their own quantum chips that'll smoke that thing left and right?
Right.
Doesn't
Right.
sound plausible. And
right.
so it's like I'll see it when I believe it, and
Yeah, when he
believe it when I see it.
right when they announced that, oh, we're gonna lithium, I'm gonna let Nvidia sell chips to China, and then it was like it was the junky. To your point, it was the junky chips and they were old. I heard they were old too. It's not one of their best chips,
Yeah,
and he was only gonna lift it for those chips, and those are the chips China didn't want. So, I found it quite ironic. I thought that was Trump's version of fake news.
yeah, exactly, right, exactly.
Uh, and it's interesting about NVIDIA that they're like, well, Google's making a chip and it's TPU and it's better. I was like, we'll see. We'll see. I mean,
Right.
I think NVIDIA's got a good runway to ramp up. Had a really good year. Uh,
I think it's going to be I think 2026 is going to be a difficult year, to be honest with you,
right,
for everybody, um, except maybe the utility sector.
right, right.
I'm betting on the end of 2026. Utilities is probably the number one sector,
Yeah,
and we'll come back and revisit this a year
yes,
from now and see what exactly is going on. I honestly think, because I would say commodities, but because I think there is going to be inflation. I think the Don is going to get his new Fed chair, who is going to be beholden to him, and he's going to cut rates, and there's going to be massive inflation and stuff of that nature. But if you have a market collapse, everything sells in a margin, when in a margin call, as speaking of Berkshire Hathaway, as the esteemed Mr. Buffett would say, is you can only find out who's swimming naked when the tides go out. And so
yeah,
I got a feeling the tide's going to go out, dude. But so it'll come back to earnings, and in
yes.
inflation, my bet is that utility companies will not cut rates, but oil for a short period of time will get slammed when the tides go out, and they will stock up on options contract on super cheap oil and then still continue to gouge their customers. So their profit margins will be through the roof.
Yeah, right, right. So do you think energy will be big in 26?
No, because I am predicting that the market will get slapped. Now, inflation would make energy and commodities go higher, but if the market gets slapped, if there is a liquidity crisis, which I believe that that is potentially the case, then everything gets sold, and including commodities.
Right,
So
right,
the only and when commodities get sold, the people that are able to buy commodities who are not having a liquidity crisis because they are sending you monthly bills that they are pretty
right, right,
positive are going to be paid, so they don't have a liquidity crisis.
right,
They
right,
are going
right,
to use the options and futures market, probably the futures market, to stock up on cheap, on disparate sellers of those commodities. So they're going to come out smelling like a rose. While I say inflation will cause things like commodities to eventually go up, again, any port in a storm, when, if there is a liquidity crisis, which would be somebody like Japan, um, unwinding the carry trade, taking all the money back into yen and selling the heck out of the stock market and U.S. Treasuries. And
Mhm.
so that would be what happens in the unwind trade, presumably. So that will put a lot of pressure on the market. And if you say that, speaking of liquidity, if I have any leveraged positions, um, then I am instantly a forced seller in those leveraged positions once things start to go really bad.
Right, right.
So
So
it
given
could
that,
be a short lived correction, but it could be quite an
right,
ugly correction.
right, right. So given that scenario, you don't have much hope for financials, right? Correct?
Yeah, I do not think
Like the
financials
banks.
are, I don't think financials are going to do well. Yeah, yeah, I think that um, uh, the credit scenario is going to tighten, and lots of auto sector loans are going to go bad, and maybe even a housing mortgage loans for people who bought at the top.
Right, right, right. And that makes sense. We're seeing rotation even in the Trump administration. We're seeing rotation. There's drastic rotations when the Democrats in. I mean, when Biden was in, there was
Yeah.
unbelievable rotations of sectors. But I mean, despite Democrat or Republican, there's always going to be rotations. And, my feeling is, and it's kind of like sports. It's like you've been in the top five for 2 straight years. The likelihood of you being able to maintain that momentum in the third year is probably slim. And that's
Well, and
financial.
so I look at the conditions. So what are some economists saying, some detailed economists saying that drove housing prices? The fact that you had unvetted immigration that
Right.
allowed 20 million people into the country, and they needed to live somewhere. So the real estate market was booming. There
Yes.
is even some rumors that um, that non-U.S. citizens were given were given government-backed mortgages
Oh,
on
wow.
places.
Hmm.
So, but either way, even if it was a rental type scenario, people were buying real estate because they could charge obscene amounts for rent. If that reverses, demand the market will be flooded with supply, and demand will be going because demand will be going substantially down.
Right.
How many of these people needed cars to transport themselves also? So it
Right.
looks like things like the high risk car car loan business and the high priced real estate slash mortgage business could be hating it. So that
Right.
would impact those sectors, and of course the lenders in which lent them that money.
Right, right. Good point. Good point. Real estate and builders have not fared well in the Trump administration, to your point.
Yep.
Materials, or what I call the builders because it's XLB, what was it? It was 11th last year, it's ninth this year. Real estate was eighth last year, it's 10th this year.
Yep.
And yeah, I don't see much hope, uh, and I don't really see a lot of news coming from the Trump administration to want to prop up those sectors.
Yep. Right. And so, from that aspect, I think the reasoning being for that is that he is, in fact, sending a huge chunk of the consumer market for those sectors away.
Right, right, right. Exactly, exactly. So related to consumers is consumer discretionary and consumer staples. They took some hard hits in 2025. For
Yep.
example, consumer discretionary came in at number three in 24. It came in at number eight in 25, and staples, which was seventh last year, came in last this
Yep.
year.
Right.
I'm thinking they're due to turn around. What say you?
Um, maybe Staples. I'm shocked that Staples did not fare better because I would think, based on the fact that there is a bit of restaurant Armageddon going on right
Right,
now,
right.
that people would be buying more staples.
Yes, yes.
But, if you've spent all your money on a new $98,000 pickup truck from one of the
Right.
major dealers, and of course you can't live in that pickup truck.
Right.
Um, uh, you would think that Staples would have picked up, but the bottom line is that if you have no cash, then you're cutting back everywhere.
Right, right, right. Yeah, good point. I don't know. I mean, Trump's under pressure now for affordability. In my mind, that has created undue stress onto consumer discretionary and consumer staples. I don't know if he's going to take this seriously, and if he does, is his plan have any merit to address the affordability problem?
Yeah, well, I think he believes either that or he talks a good game that there is no affordability problem.
Yeah, right.
Thanksgiving was cheaper than ever, man. Yeah, that's right. It is.
Yeah.
I think he thinks there is no affordability problem at this point in time. I'm not sure who is advising him, but
Right, right.
obviously, and the fact that he is pushing on a new Fed chair to be put in who will
That's
lower
true.
rates. He absolutely wants as lower rates as possible. So that obviously will create inflation, substantial inflation. So obviously he is not concerned about that. There is some strategy. I'm not sure that there is some belief in a strategy that basically says I will grow my way out of the disaster. Maybe he
Right.
believes that is the only way out or the only case. Good luck with that because you're not the only the problem being is that would work great if the U.S. was in this alone. But you look at things like the carry trade and the buying of U.S. Treasury bonds, and if the international community starts to pull out on that, that turns super ugly.
Yes, yes,
That
yes.
crashes. Have a couple of failed bond auctions, and that should do wonders for the market.
Yeah, yeah. The last
Speaking of
sector,
liquidity issues,
right. The last sector I wanted to talk to you about is healthcare. Healthcare was horrid for the first 18 months of the administration. It has rocketed lately. It got to number six this year. It was 10th last year. It had a measly 2% return last year. This year, it's up 11.5%, challenging financials for the number five spot. It's in at number six.
I'm shocked that it was ever banned because I can tell you the
Right.
population is aging
Oh,
substantially.
yes.
So
Yes.
I'm
That's a
shocked that
good
it was
point.
ever banned.
Yeah, so that, given that prognosis and its recent momentum, I think that could be a top five sector and one that could
I believe that because there
challenge
are a couple
utilities
of
probably.
things, even in substantial inflationary times, that people don't want to do without, which is
Right,
healthcare and staples. So
right,
those could be the some of the top pieces of
right,
next year. And now,
right,
if there is a substantial liquidity crisis, then you got a problem in every sector. So who
right.
knows what would be again? Then I'm going to fall back to the utility sector, who was able to loot cheap commodities to run their operation and still pay us the lofty costs on the consumers.
Yeah, yeah, yeah. And you bring up good points in three sectors you probably want to watch for in 2026 is everybody needs health care. Everybody goes to the doctor. Everybody gets
Yep.
sick. So
Yep.
healthcare should be good. People are fond of electricity.
Yeah, right, exactly.
Paying that bill.
Modern technology called electricity.
And then people got to eat. That's staples.
That's right.
So,
And see, the whole piece of that, Mr. K, is it's really hard for the AI to get trained on your data when you don't have any electricity to
right.
actually use a
Exactly.
computer and
Right.
and surf the internet and buy things, man, or even just surf the internet.
Right, right. And that's why utilities have run hot the last 6 months is everybody was spending like crazy for AI. And it's like, hey, folks, what companies are going to power the AI? And they're all
Yeah,
in the utility sector.
yeah.
So, and as we've seen, rates have gone crazy. I'll conclude on this note. It seems like there's been some deregulation under the Trump administration for these utilities companies. I mean, they're able, they, I mean, some of them have doubled their riders in
And
2025. I mean, that seems like pure profit for them.
Ohio being one of those that allowed their rider to go up. And so just explain riders for anybody that doesn't understand that. You can go to a different utility company that buys in bulk from the larger utility producer and maybe get a better rate. However, the distribution lines are always owned. Half
Right,
your bill is the distribution lines that are owned by the power producer in your area. The rider covers that
yeah,
piece. So the
yeah,
bottom line is when they essentially put all these riders in there, it basically says we don't care who you actually buy your electricity from, we're still getting our cut,
oh yeah,
man,
yeah, oh yeah.
or
Uh,
increased, or substantially increased cut.
Right, right. So to wrap it up, our bold predictions for 2026 is utilities, staples, and what was the other one?
Maybe healthcare.
Healthcare, healthcare. You're right. Yep. Those should probably be the top three in 26. All right. You can reach us via email at one for the road podcast. That's the number one, the number four, the road podcast at gmail.com. We do have a website. It's no, one for the road. It's also number one, number four, the road.net. Uh, like and subscribe to us on YouTube. We're on three audio platforms, those being Podbean, RSS, and Spotify. For C Squared, I'm Mr. K. Have a good week.
Thanks for tuning in, folks. Have a good one.